If something should happen to you, what would happen to your farm? If the security and protection of your family and the passing of the farm to your loved ones is your dream, then you need a well-thought-out farm estate plan.
I'm Brad Swenson, president of Swenson Investments in Commodities in Sioux Falls and Huron. We're a family-owned company that helps farmers keep the family farm.
Over the last few years, the farm economy has been good, but it's been so good that as I start looking at farmland values across the United States, they're staggering compared to what they used to be.
Well, we're standing on some farmland right now, and it's interesting when you stand on a piece of ground and you think, what is that worth right now compared to what it was worth just a few years ago? And it's a drastic difference. And then you start thinking, man, is it really worth it when it gets to that price just to farm this ground?
Okay, so let's run through some real numbers for what we know over just the last few years. Let's take a look at the state of North Dakota first. If you look at North Dakota cropland values, now this does not count pasture, but cropland values, and this is from the USDA, information from USDA, you can see that going back into late 1980s, into the 1990s, it was in the $300 to $400 range in terms of price. But look at what happens in 2005, you get above $500. By 2010, it's above $900. I mean, land prices have literally tripled in not very many years. So turn that to a percentage game, and from 1989 to 2001, it was just a 1.8% annual increase. Well, look at 2007 to 2010, 14.1% average annual increase. That is huge, and it is not sustainable over a very long period of time. So turn to Minnesota now.
Well, moving state to state, the numbers are going to change a little bit, but you can see the same kind of trend. In Minnesota back to 1990, land prices were around $700, and that really held for a few years there. But wow, as it started hitting the late 90s, it ramped up to $1,000. You get into the 2000s, and you're talking about $1,500, and now we're looking at $3,000 an acre for average land prices when it was $700. So the increases were, slight 2.5% through the early 90s, and today in the 2000s, it's gone up 12.3% per year.
Taking a look where we farm in east central South Dakota, median farmland sales prices have more than quadrupled in just the last few years. Back in the 1990s, you had a lot of the $400, $500, $600 range, and by 2009, $2,634 an acre. Just unbelievable. And if you look at the percentage growth per year, early 90s, 0.4%. Well, the last 6 years here, 19.5% per year increase.
Well, the ground we're on today is some ground that we farmed that my great-grandfather actually lived on and farmed, so it's been in the family for quite a while. And you think about when my grandpa was born back in 1912, the average land price by 1914 got to the highest price it had been, $947.
When adjusted to $2008. So that's, it wasn't actually selling for $947 back then, but when you adjust it to today's dollars, it was worth quite a bit.
Well, it was a big peak, and it was one of those times, kind of like today, where you say, wow, land prices have never been higher than this. Where's it going to go from here? And today, do we think land is going to go up more, or is it going to go down or sideways? We don't really know.
But the thing is, when you look back on this chart all the way back to 1900 and across the entire United States, when it did hit that peak in 1914, it went actually down for about 30 years in a row until the early 1940s. Then you went up for about 40 years in a row till you hit 1981, and it got up to $1,940, so almost double that peak in 1914. And again, remember, these are adjusted for inflation to $2008. So, it was basically double what you had in 1914, and you can see how it dropped off, and I think we all remember what happened in the early 1980s with the farm crisis. Well, now things have gone up even above that level where we were at in the early 1980s. We have reached a new all-time high, a peak for farmland values in U.S. history.
And here's why those land values are so high. We've got so many positive things going on for farmland values. We've got low interest rates, great commodity prices, really for farmers, low levels of debt, high net worths, relatively speaking, poor and uncertain stock market, high interest from hunters and recreation, good stable government farm programs, good crop insurance, a high demand for land, and an optimistic future outlook.
And you ask yourself, when was the last time we had all these factors in place? Never. It's never happened before in history that every single factor has lined up and it all says farmland values should be high, and they are. So the question is, are we at the peak? And when are these things going to start going down? And when they go down, how much are they going to go down? Well, we don't really know. But all we know is that when you look at all the different factors that would go into farmland pricing, they're all lined up saying farmland values should be high. So if one of those things, or two or three of those things start to change, like let's say inflation hits, let's say interest rates start to go up, let's say commodity prices start to come down, there are a number of things that could happen that could negatively, could detrimentally affect farmland values.
Well, let's look at why that can be risky when land prices get high. Let's take it from an investor standpoint. Let's say that you got some high price ground for $5,000 an acre, but you can only get $150 cash rent on that ground. Think about what kind of return on investment that is. That's a 3% return on investment year one. Now, for many of those investors, they were getting out of the stock market when things were crashing and going down. They thought they'd get into something a little more stable like farmland, and that made the farmland prices go up, which is fine. The problem is the cash rents couldn't be justified to get a huge return on investment. You aren't going to get a 20% return on that because no farmer could afford to pay $1,000 cash rent. You're going to get a low return, like maybe a 3% return for $150.
So when you look at all these different factors, again, whether it's the investor and what he's thinking, you look at interest rates being at an all-time low, we have everything in place today for high farmland values. So the moral of the story is this: yes, we may not have quite reached the peak on farmland values, but we're probably pretty close. And if you're going to go out and pay cash for farmland, fine. But all we get worried about is we just don't want to see a repeat of the early 1980s. So all we're saying is it might be at least something to consider to not get yourself over leveraged. So if you can afford to get into farmland, fine. But if you've got to borrow all kinds of money to do that, now may not be the best time to do it.
Well, there are a lot of tough choices for farmers, but one choice that's not so difficult is whether to control this weed or not. You definitely want to control our weed of the week. Can you identify it?